Hey everyone, so in this video I'm going to discuss a huge strategic choice that Tesla has made. Now, they may have made this choice a couple of quarters ago or a couple of months ago, but they didn't come out and tell everyone that, you know what, we've made this choice. Maybe they were just testing it out. And this quarter, in this earnings release, they pretty much said, you know what, this is our choice. We've made it. This is what we're going to do going forward. So, in this video, we'll talk about that. And what is that choice? It's between sales or profits. With all this new competition coming online in the last 2 to 3 years, Tesla has been forced into a decision. Do you want to capture a growing amount of sales and market share? Or do you want to focus on profitability? Now, those are in question now because at your existing prices you were selling your cars at before all this competition came in, you're no longer able to do that. That's no longer possible because now consumers have a myriad of choices between which electric vehicle to buy. So they're not always going to choose, or they're not more often going to choose a Tesla. Now they have another choice. Even if the car is inferior to Tesla, maybe the customer just likes the color or the design, or maybe the customer just has something they don't like about Elon Musk's political stance, or whatever it might be. Now they have an alternative to choose from. And so if Tesla kept its prices the same, and in other words kept its profit margins the same, it would have lower sales. So what is the choice that Tesla made? Tesla chose sales over profit margins. And I'm going to show you here in their statements. So Elon Musk says, this is a good time to increase our lead further, and we'll continue to invest in growth as fast as possible. So, in other words, investing in growth as fast as possible is a message saying, we're not thinking about profits, we're thinking about growth. So, we're going to invest in that growth. Then the CFO comes on, says first, automotive gross margin and operating margin reduced sequentially. That was not surprising, right? Tesla cut prices 7 times in the last 3 months across Europe, China, and North America. Uh, Unless there was a big jump up in sales, profit margins were going to fall, and they did. Profit margins fell, and they fell big time. Gross margin fell from 29% to 19%. Operating profit margin too fell big time. Um, the CFO saying progress on vehicle cost reduction continued in the first quarter, with meaningful improvements on logistics and beginnings of some commodity cost reductions starting to be realized. Okay, but we didn't see that yet in the financial results. In the financial results, what we saw is a big drop in gross profit margin. And so, yes, they might be improving in terms of the cost of goods sold per car. That's not showing up yet in the financial results. I wouldn't be surprised if it does in the next few quarters. It just hasn't just yet. And finally, in the most direct statement that highlights their decision, our approach is to grow volumes as quickly as possible in both our vehicle and energy businesses. We plan to continue to invest heavily into our future plans, which include the Cybertruck next generation platform, in-house cell production, energy storage business, and our autonomy and AI enabled products. That's what we're focused on, growing our business, attracting more customers, increasing production capacity, increasing product availability, increasing manufacturing, all of that. We are investing in that. That's where we're going. So that's their choice. We're focusing on growth at the expense of profits, and we're already seeing evidence of that. So what does that mean for investors? Well, let me show you this chart. Here is Tesla's operating profit margin over the trailing 12 months, and I've pulled up a chart here for the last 10 years. And what you notice from, let's say, 2014 all the way to about 2019, Tesla's operating profit margin was negative about 6%. It fluctuated right down and up and down, but if we draw a line from 2014 to 2019, the operating profit margin was roughly flat. Now, let's look at Tesla's stock price. If we go back 10 years from 2014 to 2019, yeah, roughly flat, right? You don't see that much growth there. There might have been some growth, but it's not apparent if we just look at it from this chart here. Now, ignore the right side of this chart after 2024 now. Try to ignore it for now. Just look at from 2014 to 2019, roughly flat, no exponential growth, no dramatic increase in stock price. Now, let's go back to the operating profit margin. From 2019 to 2022, look at that dramatic increase in operating profit margin from negative 6% to over 12%, approaching 17%. So a big, huge, massive increase in operating profit margin over 3 years' time. Okay, now let's look at the stock price from 2019 to 2022. What a coincidence. The stock price explodes from where it was here, closer to $20 per share, if we look at the split adjusted price, all the way up towards $400 per share. Now, this wasn't by accident. This wasn't because Tesla magically got popular, though it did become popular among retail investors. But more importantly, Tesla improved its profit margins. It demonstrated that this business can be very, very lucrative, as evidenced by its profit margins. And these profit margins were the best in the industry, the best among nearly every car maker. So that's what really got investors excited, at least for certainly institutional investors and savvy investors were really excited about Tesla's improving economies in scale, demonstrating the boost in profitability, and showing Wall Street that, hey, we are a better car company. We are a better car company. Just look at our results. Look at our sales growth. Look at our profit margins. We're just a better car company. And Wall Street was like, you know what? You are. You are a better car company. Here, let us invest in your business. And boom, the stock price explodes. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. But look at the last part of the chart now. From $400 per share, Tesla stock price falling dramatically below 120. It was approaching 100 and it's recovered somewhat, but now it's settled at around $164 per share because operating and gross profit margins are now in question again. They're now in question again. As you saw in the most recent quarter, they collapsed. And before these things actually happen, before you and me see these things, what analysts on Wall Street forecast that these things are going to happen. Now, I've been telling you, if you've been watching, I've been telling you that Tesla's profit margins are going to fall. I've been telling you this for 6 months now, right? I saw this coming. Whenever there's an increase in supply, that's a sign of increase in competition. And whenever there's an increase in competition, that's bad news for profit margins because it forces companies to a choice like Tesla was forced into: sales or profit margins. And whatever they choose, it's not good news, right? Because the increase in production capacity, the increase in supply is just bad news. There is no other way to look at that if you're looking at an industry overall. You're not just looking at one company in the industry. You're just looking at car manufacturing overall. There's been a significant increase in supply over the last 3 years. Specifically, an increase in electric vehicle supply, which is directly the area that competes with Tesla. And so analysts and Wall Street started to bid down Tesla stock. And here we are at $164 per share. And here they are saying, you know what, our profit margins, we're okay with letting those fall. We're going to focus on sales and investing in our business. So what that could mean for investors is that Tesla stock price remains under pressure in the near term. In the near term. Now, longer term, it may end up being a very good thing for the company. Longer term, I'm talking 5, 10, 15 years down the road, because this puts a lot of pressure on the competition, and it makes it harder for them to achieve profitability. Now, they're not going out of business anytime soon. That's why I say longer term. I'm looking at 5, 10, 15 years, because the competition has just made these investments. The competition like Ford, GM, Rivian, Lucid, they've put billions of dollars into this output capacity, and they're not gonna close up shop anytime soon. But by Tesla lowering prices, focusing on growth, it's going to put more pressure on those other companies, which do have lower profit margins. They are many of them are losing cash on each sale of each car, and so it's going to put more pressure on them and make it harder for them to achieve profitability. So if we're looking 5, 10, 15 years, maybe this turns out to be good news for Tesla. But in the near term, this is going to pressure Teslas and all industry electric vehicle car companies. So industry wide, this is Tesla saying, let's go to war. We're cutting prices. We're focusing on our growth, and I'd like to see you. I'm daring you to try and do the same. And so, and you've started to see competitors, BYD, um, Ford, and others I'm forgetting, that have also said, you know what, Tesla, you're lowering prices. Okay, we're lowering prices too. And so it's going to be in a near term a race to the bottom here. Not good news for investors in the near term, but longer term it could be. Okay, so to recap, Tesla has been forced into a choice by the competition, who saw Tesla's incredible profits in electric vehicles, and everyone and their cousin started to say, we want to sell electric vehicles now, and they all put billions of dollars into increasing manufacturing capacity. Now all those cars are starting to come into the market, and Tesla's realizing, hey, we need to lower prices if we want to hit our production targets and sustain our market share. And their choice is, we are going to do that. We're okay with our profit margins falling. What we're not okay with is letting our competition take market share. All right, so I hope this video has been helpful. I truly appreciate your viewership, and I really hope I can see you again for another one of my videos. Thank you so much for watching.